Welcome to Smart Stock Watch. Today is 2026-0219. We're reviewing Host Hotels and Resorts' fourth quarter and full year 2025 results. The company released its report on February 18, 2026. I'm joined by John, senior analyst from Smart Stock Watch. John, quick snapshot. What should viewers be looking for?
Thanks. Investors should watch RevPAR trends, adjusted EBITDA and FFO per share, capital allocation actions like buybacks and dividends, and management's 2026 guidance, all of which the company highlighted in the release.
Revenue and profitability overview. Host reported Q4 revenue of $1.603 billion and full-year revenue of $6.114 billion. John, how meaningful were those top-line numbers?
The top line showed solid momentum. Q4 revenue was up 12.3% year-over-year, and full-year revenue rose 7.6%. That reflects stronger room, food and beverage, and other revenues, including $99 million of condominium sales in Q4 that boosted the quarter's revenue mix.
Net income rose to $137 million in Q4 and $776 million for the year. What drove the profitability improvement?
Improved operations and gains on asset sales lifted GAAP net income. Operational improvements and higher rates boosted margins, despite higher wages and benefits. Operating profit margin was 12.0% in Q4 and 14.0% for the year.
RevPAR segments and operations. RevPAR metrics are central for hotel owners. Host reported comparable hotel total RevPAR up 5.4% in Q4 and 4.2% for the full year. What's behind that strength?
It's largely transient leisure demand and rate increases across the portfolio, plus stronger food and beverage and ancillary spend. The company also highlighted a continuing recovery in Maui that helped offset group softness linked to renovations.
Any notable regional or segment differences?
Yes, domestic urban and resort markets like Maui, Oahu, and New York outperformed. Group room nights declined as expected due to transformational renovations, but transient accounted for about 61% of room sales, supporting the RevPAR gains.
Adjusted EBITDA, FFO, and capital allocation. Adjusted EBITDAre was up materially in the quarter to $428 million and $1.757 billion for the year. How should investors interpret that alongside FFO metrics?
Adjusted EBITDAre growth reflects improved hotel operations and one-time gains like condominium sales. Adjusted FFO per diluted share was 51 cents in Q4 and 2.7 for the year, solid for a lodging REIT and supportive of cash returns to shareholders.
Host returned capital via buybacks and dividends. How significant was that?
They repurchased $205 million of stock in 2025 and paid total dividends of $0.95, including a special dividend. That shows a balanced capital allocation posture, reinvestment in transformational capital programs while returning cash to shareholders.
Balance sheet, liquidity, and credit. Balance sheet metrics looked highlighted in the release. John, how would you rate Host's financial position?
Robust. Debt stands at about $5.1 billion with no maturities in 2026 and a weighted average maturity of roughly 5 years. Liquidity of $2.4 billion and a Moody's upgrade to Ba2 give them flexibility for capital programs, dispositions, or additional shareholder returns.
Any refinancing or interest highlights?
They issued $900 million of senior notes and refinanced maturing notes, maintaining a balanced maturity schedule and lowering marginal coupon on some issuance, all positive for interest rate risk management.
EPS forecast versus actual. Analysts were forecasting 47 cents EPS based on a survey of 7 analysts. Host reported diluted earnings per share of 20 for the quarter. We're using GAAP EPS since no adjusted EPS was provided. John, that's a sizable miss. What's the takeaway?
It is a meaningful miss versus the 47 consensus. The gap is driven by how certain items were recognized in GAAP EPS in the quarter. Gains on dispositions and insurance timing affected full-year comparatives, but the underlying operating metrics were solid. Market reaction would likely be negative on the EPS miss, despite strong RevPAR and adjusted EBITDAre, because headline EPS matters for near-term sentiment.
Did the company provide any immediate response or context?
The release emphasized operational strength, asset sales, and capital returns. Management framed the result in the context of portfolio actions and reiterated 2026 guidance, essentially asking investors to look through the quarter to forward-year earnings and cash generation.
2026 guidance and management commentary. Host provided full-year 2026 guidance, diluted EPS of $1.27 and total RevPAR growth of 2.5% to 4.0%. How credible is this outlook?
The guidance is reasonable given the momentum in transient demand, the anticipated contributions from condo sales, and asset dispositions. Management also factored in expected capital spending under the Marriott and Hyatt transformational programs, and they disclosed assumptions like modest group improvements and no additional business interruption proceeds beyond $7 million already received.
What did the CEO say about the outlook?
CEO James Risoleo emphasized the quality of the portfolio, allocation of capital to unlock shareholder value, and optimism about luxury and upper upscale travel. He highlighted balance sheet strength and liquidity as reasons Host is well-positioned for upside.
Risks, strategic initiatives, and leadership. The company described major transformational capital programs and ongoing dispositions. How do those initiatives balance growth and risk?
The transformational programs are intended to drive higher future RevPAR and returns, with operating profit guarantees from Marriott on the new program that lowers execution risk. Dispositions free up capital and reduce near-term exposure to high capex assets. Key risks remain renovation-driven group disruptions and uncertainty in markets like Maui, where recovery timing is still a variable.
Can you read the CEO's core statement from the release?
Yes. James F. Risoleo said, "Our strong fourth quarter and full year 2025 results underscore the success of our strategy and the quality of our portfolio. With an investment-grade balance sheet, significant liquidity, and a diversified portfolio of iconic properties, Host is well-positioned to capture additional upside from lodging demand growth and take advantage of potential opportunities in the future."
Closing summary and takeaways. John, wrap this up for investors. What's your conclusion on Host as an investment following these results?
Host delivered clear operational momentum across RevPAR and adjusted EBITDAre, supported by active capital allocation, buybacks, special dividend, and investment in transformational programs. The headline EPS missed consensus, which creates short-term pressure, but the balance sheet strength, asset sales, and 2026 guidance support a constructive medium-term view for shareholders who prioritize cash returns and recovery in upper upscale leisure demand.
Thanks, John. That's it from Smart Stock Watch. Thanks for watching.
Thanks, and remember to consider both GAAP and operating metrics when evaluating REITs.
Key takeaways. Quick recap. Host posted strong operating trends, returned capital, and set a constructive 2026 guide, but Q4 EPS missed consensus. Thanks for tuning in. Like, share, and subscribe to Smart Stock Watch. Tell us, do you see Host as a buy on the guidance and capital returns, or is the EPS miss a red flag?
We'll keep watching execution on capital programs and the timing of asset sales. Please share your thoughts in the comments. We'll follow up in our next update.